Hi, this is Peter Schiff coming to you with another video blog. This is Tuesday, March 10th, 2009. Well, a big rally today, finally, in the stock market. The Dow was up 380 points. That's almost 6%. NASDAQ was up about 90 points. That's about 7%. And, you know, we knew a rally was coming, and the question is, how much longer is it going to last? Is this going to be a 1, 2, 3-day wonder? Is the rally going to last for a few weeks? Is it going to last for many months? I think there's no way to tell at this point. But one thing I'm confident of is that the bear market is not over, especially when you have these type of violent rallies. You know, the biggest rallies come in bear markets, right? Think back over the last year or two. All these spectacular rallies that we've had, yet we continue to make new lows. We had the same phenomena during the 1930s. So bear market rallies are always more spectacular than bull market rallies. Just like in the bull markets, you have big violent declines that shake people out. They shake confidence. That's why they say a bear market climbs a wall of worry. It's those sharp declines that provide the worry. Well, in a bull market, or bear market rather, that slides a slippery slope of hope, it's these big rallies that make the headlines, the 380-point rallies, the 6% in one day. That's what creates the hope. So I don't think the bear market is over. I think maybe a lot of people are going to believe that, especially if this carries through. You know, I wouldn't be surprised if we had a rally that lasted for many months. I wouldn't be surprised if the Dow got back above 8,000. Maybe the Dow gets to 8,500. You know, it was at 6,500. That would be a 2,000-point rally. It'd be a 30% rally. People would be saying it's a new bull market. But I don't think it will be. I think it'll just be another in many bear market rallies in a longer term, bear market rallies in a longer term bear market. So it's a bull move in a bear market, which is the title of my book, or my most recent book, the little book of bull moves in bear markets. This is definitely still a bear market. Also, I think that if we do have a meaningful rise in the value of U.S. stocks, my gut is that would be accompanied by a drop in the dollar. It would also be accompanied by a rise in foreign stocks, which would mean that if this is going to be a bigger move, a bull move in a bear market, I think you'll get a bigger bull move for your money outside the United States, because I think foreign stocks will recover more than U.S. stocks, and I think they'll have the added boost of a weakening U.S. dollar, because in the short run, you've had a negative correlation between the dollar and stocks. Whenever stocks go down, the dollar goes up. Whenever stocks go up, the dollar goes down. So if we're going to be in a period where stocks rise for a while, I would expect the dollar to fall. Ultimately, I expect that relationship to go away, and I expect the dollar to decline regardless of whether U.S. stocks are rising or falling. Ultimately, the dollar might be falling even faster when U.S. stocks are falling, but that has not been the case for the last 6 to 8 months. But in any event, if this rally turns into something bigger than just a few days, I would expect it to be an even greater rally abroad, and even more reasons to be invested in foreign stocks for this bounce rather than in U.S. stocks. Also, you know, something interesting today, I was watching a speech that Ben Bernanke made in front of the, I guess was it Foreign Relations Committee. I forget who he spoke in front of. Council for Foreign Relations. Anyway, it was very interesting because in the beginning of the speech, and you can get the whole text online, but in the beginning of the speech, he actually acknowledged why we have an economic crisis. He said that the crisis began as a result of global economic imbalances. He said the United States and some other countries spent and borrowed too much money, and they didn't have enough savings. And there were other countries that saved a lot of money and had excess savings, and so they loaned money to America. And he also said that we did foolish things with that money, that the free market and the government didn't take action to make sure that the money was invested well. And as a result, we borrowed a lot of money that we couldn't pay back. We blew the money, and now we're having a global collapse. Well, that was exactly the point of my book, Crash Proof, How to Profit from the Coming Economic Collapse. I wrote about these imbalances. I understood the problems that they were creating. I understood the phony U.S. economy that was built on the false premise that we can borrow and spend money indefinitely. Well, the interesting thing is, if Ben Bernanke understands that it's the global economic imbalances that are at the heart of the problem, why is he trying to exacerbate those imbalances? Why are his policies aimed at making them worse? If the problem is that America doesn't have enough savings, why is he doing what he can to destroy what little savings we have left? Why is the Fed policy one to encourage even more debt when he just acknowledged that too much debt and a lack of savings is why we're in this mess? It is incredible for the Fed to understand, and for Bernanke to understand that we're in this mess because we borrowed too much money, and now encouraging us to borrow even more money as a solution. Well, how can that possibly be the solution? You know, it's funny, in his speech, Ben Bernanke also talked about the possibility of creating another federal agency to kind of look over the markets and make sure that the business cycles aren't too extreme, that you don't get the booms and busts, that you don't get, big rises in the booms and big busts, that something stabilizes it. And, it's almost comical, because why does Ben Bernanke think we have booms and busts in the first place? The reason we had this gigantic boom, the reason that we had these massive economic imbalances, was because of Fed monetary policy under Alan Greenspan and under Ben Bernanke. Why is it that Americans had no savings? Well, because interest rates were too low. Why were we able to borrow so much money? Again, because borrowing was cheap. Why was borrowing cheap? Why were interest rates so low? Because of the Fed. So here now you have Ben Bernanke saying we need to create another federal agency to watch the Fed, to make sure the Fed doesn't print too much money, to make sure the Fed doesn't keep interest rates too low. Well, that makes no sense. Why should we create another government agency to counteract the damage being done by the existing government agency? I got a novel idea. How about just get rid of the Fed? Why not just have no agency that we need a watchdog for? That would be a lot cheaper. We wouldn't have to hire all these bureaucrats. I mean, the Alan Greenspan and now Ben Bernanke did all the damage that he's now talking about. All the imbalances, everything that he's now saying created the problem, and all the things that he says we now need to be vigilant against, that's what the Fed did. This was all a creation of the Fed. It doesn't make any sense to say now we need to have a counterbalancing force. Why don't we just go back to sound money? Why don't we just go back onto a gold standard, and we won't have these big booms and busts. We won't have, rampant inflation. We won't have to worry about these things because we'll have a natural free market discipline. We won't just have politicians controlling the printing presses, and we won't have monetary policy based on sustaining bubbles and garnering votes and making everybody feel good. That is ultimately what was at the root of this problem. But it was very interesting to see Ben Bernanke actually address the root causes of the problem. But of course, the rest of his speech, basically, he forgot everything he said. He didn't focus or mention the obvious contradiction between what the problems were and what his solutions are. Because all of his solutions involve further running up those imbalances, right? We're borrowing even more money from foreigners. And he actually mentioned that we didn't use the money we borrowed wisely. Of course we didn't. We spent it. We didn't invest it. We spent it. Well, what are we doing with the money we're borrowing now? What are we doing with all these big deficits? We're spending that money too. We're spending it exactly the same way we spent money in the past, except now we're doing it in a grander fashion. Now we're running up the debts even bigger. So if the global economic imbalances that caused this crisis were big before, how much bigger are they going to grow now as a result of what the Fed is doing, as a result of what Bush already did, as a result of what Obama is in the process of doing? And of course, now we're having to borrow so much money from the world's not going to have any money for anything, for any other productive investments. The U.S. government is going to crowd out everybody. We're going to basically take all of the world's savings and squander every penny of it. The only help the world has, and the only help eliminate these economic imbalances.